Good afternoon, everyone. Namaskar. Today, I, Shatarupa Mishra, Joint Director, Income Tax Publicity, Directorate of Public Relations, Publications and Publicity, CBDT New Delhi, welcome you to yet another informative session in this special Samvaad series on the new Income Tax Bill 2025. Today we have with us Shri Mahesh Shah sir, currently posted as Principal Additional Director General, National Academy of Direct Taxes, New Delhi, is an officer of the Indian Revenue Service of the 1994 batch, having experience of more than 29 years across many verticals in Mumbai, Kolkata, Ahmedabad and New Delhi. Sir has worked extensively in international taxation and transfer pricing for more than 50 years. Sir is a regular speaker at the National Academy of Direct Taxes and the Direct Taxes Regional Training Institutes and various other professional organizations. And Sir has also represented the Government of India in various international forums and international taxation. He represented India in the BEPS committee at OECD Paris. Sir was also part of the arbitration proceedings in case of Vodafone in Hague, Netherlands. Sir is an expert trainer in various fields and has also designed and delivered courses on international taxation and transfer pricing in India and abroad. Sir headed the committee with reference to the chapter on capital gains in the new income tax bill. Hence, today we are honored to have him here with us in this session to enlighten us on the rationale, takeaways and impact of the changes made to the chapter on capital gains in the new income tax bill 2025. Namaskar, sir.
Namaskar.
Thank you for joining us today in this session of the special series of Samvaad that we are undertaking. Sir, firstly, my question to you would be, sir, what are the key takeaways of the new income tax bill when it comes to the chapter on capital gains, sir?
Simplified language. The first and foremost is that we have made the language absolutely simplified. Legal jargon has been simplified to ensure that the provisions are understandable to the common man, making it easier for everyone to grasp the nuances of the law. Shorter sentences, all those big sentences, long sentences have been subdivided into shorter sentences. Complex paragraphs have been reduced to simple language so that a common man with no specific specialized knowledge of income tax can also understand. We have also removed all the provisos and explanations. We have integrated the provisos. So, instead of listing many provisos, and we have made it either the subsections or the clauses and part of the main section itself. Consolidated explanations, wherever the explanations have been provided in the old act, they have either been clubbed together in section 2 or put it at the end of the chapter or the section to make it absolutely simplified. Grouping related provisions, so wherever similar provisions were scattered throughout the chapter, they have been regrouped and put under one particular grouping so that a person who is concerned with any particular aspect of capital gains can go to that part of the chapter and understand all the provisions of the act. Elimination of redundancies. So, we have seen that over the years many provisions has lost relevance and have become redundant. So, now what we have done is all those redundant provisions have been removed to make it a simplified text. We have also used tables and formulas wherever possible to make it absolutely simple and in terms of very simple language for understanding of the common man.
Thank you, sir, because I'm sure these steps would go a long way in making the provision simple for and easy to understand for the common man. Sir, our viewers would like to know that what was the approach that was taken to simplify this particular chapter?
See, first of all, we have taken the 1961 Act as the base case reference. So, we have taken the base act as 1961 and then tried to simplify the language to make it absolutely clear to the users, not just the specialized knowledge people, but a common man. As we all understand that capital gains is a chapter which is concern of many investors, because even a common man would have some implication of the capital gains chapter.
Right,
So,
sir.
we have taken the base case as 1961 Act and tried to simplify the language. Over and above that, we have also gone into international best practices and referred to the acts of various countries, especially the United Kingdom and Australia, which they have simplified their acts recently. So, we have gone to them, the best practices all over the world, and tried to take wherever possible. There has also been the suggestions from various stakeholders, including the taxpayers, the chartered accountants, the associations, industry, and the response has been overwhelmingly well. We have received so many suggestions. Wherever the suggestions are practical, we have tried to implement and tried to make it a part of the simplified act. We have also gone to the law ministry for the language of the act, and so that it attests the judicial scrutiny of the provisions of the act. So, these are some of the methods we have followed for.
Thank you, sir. Sir, what were the specific changes that were made to improve the readability of the chapter on capital gains, sir?
Yeah. So, restructured sentences. So, what we have done is long and complex sentences have been restructured into shorter ones. So, shorter sentences improves the visibility as well as the readability of a statute. Wherever there were so many provisos making it a very complex and the explanations, we have taken it into the main sections to make it less confusing. So, it used to create confusion amongst the minds of the public. We have removed them, made it a part of the section itself, removing the confusion and better understanding. We have also eliminated redundancies, I have already pointed out. We have also integrated the provisions. So, wherever a group of provisions were scattered in the statute, we have regrouped it at one place, so that a person has a comprehensive reference point to the act and he can understand as to what exactly would be the applicability. We have also tried to make it in a tabular form, especially provisions relating to the gifts and where the property has been acquired from a previous owner and it is not regarded as a transfer. So, all these have been put up in the form of a table for improving the understanding and make it absolutely easier for the taxpayers to understand. And of course, we have also used the formulas for computation mechanism and all that, wherein we have specified the value. So, even a layman, a common man would also understand as to what exactly are the provisions and what would be the tax computation mechanism.
Sir, thank you, sir, for that explanation. I'm sure it will benefit the redrafted provisions, will benefit the taxpayers, sir. Sir, in what ways do you believe that this updated capital gains chapter will affect compliance from the taxpayer side and also the overall tax administration when you look at it from a tax administrator point of view, sir?
See, when I was doing my chartered accountancy, what I realized that there are too many provisos and explanations given. And why so? Because whenever we amended the act, we have put it one explanation or provisos, it was making it very complicated. Say for example, in the earlier section 48 of 1961 Act, in section 48 there are 8 provisos. So, making it absolutely cumbersome for a layman to understand. So, what we have done here is that all those provisos have been eliminated and made part of the section or subsection or the clause itself. So, anybody wanting to read would have to go through one after the other, and there is no overlapping of these provisos or notwithstanding anything words and all that. So, there is a streamlined structure and removal of ambiguities, shorter sentences. So, the taxpayers would understand as to what are their obligations of the tax payments, how much they are required to pay for the taxes, and even for the tax administration, because the tax administration has to apply the law. So, it will be very clear to the tax administration, it will help them in better understanding, better application of the provisions and making a very robust system of tax assessments. So, it will help the taxpayer as well as the tax administrator, and when the law is simple and easy to understand, it encourages voluntary compliance, which has been the focus of the department nowadays, because the trust first and scrutiny later is the concept on which we have been working throughout these years. So, the idea is to provide the better voluntary compliance by the taxpayers, for which the simplified tax would really help.
Right, sir. So now a question in everyone's minds is that are there any changes to how the capital gains are being taxed in the new income tax bill, sir?
Yeah, because capital gain is one chapter which is applicable to the maximum taxpayers
Yes, sir.
across.
Yes, sir.
So, there has been a concern in the taxpayer community whether there are any changes in the Income Tax Act. Now, let me again emphasize that the idea is of the government is simplification. Last year in the Finance Act 2024, we have reduced the multiple asset classes, the multiple tax rates, and made a uniform tax rate of 12.5% on long term capital gain and 20% on short term capital gain. This 12.5% long term capital gain is without indexation. So, now there is only one rate for all asset class, whether it is gold or shares or land or building. There is only one class, there is one taxation rate of 12.5% for long term and 20% for short term capital gain. So, there is absolutely no change in the new act. We have just followed what was there in the earlier act, and we have not changed anything.
Sir, I'm sure that will assuage a lot of the apprehensions that are going on in the minds of the viewers right now, sir. Sir, also flowing from that question, sir, how are capital gains from the sale of residential property treated under the new in the new bill, sir?
Again, there is no change absolutely. I have already stated we have not changed the rates or the class of assets, it remains the same. For a residential house property, there are basically two sections which deal with the exemptions. So, if you sell a residential house property, there would be capital gain depending on the holding period, either short term or long term capital gain. If it is a long term capital gain, it is taxable at 12.5%. And if you opt for that indexation benefit, which has been given on a public demand in the last year, then it will be with indexation 20%. That is the taxation part. But there is an exemption given in the provisions of the Act that if you sell a residential property and buy another residential property, of course subject to certain conditions which are laid down in the Act, then you can get exemption from the capital gains which you are supposed to pay on the selling of the house. This is section 54. So, if you sell a residential property and invest in the other property, you may not be taxable on the capital gains if you invest in a residential house. If you sell any other asset class other than of course land and building, then you are allowed exemption under section 54F. Therein, if you invest in a residential house property, you may be eligible for certain exemptions from the capital gains tax, subject to of course certain conditions laid down in the provisions of the Act. So, these are the exemption provisions, beneficial provisions by which a taxpayer can reduce the tax liability by planning his investments in a particular way. We have also seen that world over there are exemptions on the house property being bought by a taxpayer. So, we also continue with those provisions in India.
Thank you so much, sir, for explaining that. Sir, now my final concluding question would be regarding cryptocurrencies. Whether the new act modifies the tax treatment of income gained from cryptocurrencies?
Not at all. We continue to have the same tax treatment for the cryptocurrencies as well, but in the finance bill of 2024, which 25, which is produced in the parliament, we have defined as to what exactly the cryptocurrency means. That has also been incorporated in the new act. So, that the definition part has been incorporated, which is also already there before the parliament, before pending before the parliament. So, as far as the new bill of 2025 is concerned, there is absolutely no change whatsoever in cryptocurrency as well.
Thank you, sir. Thank you for joining us today in this session on the changes in capital gains chapter of the new income tax bill, sir. Thank you for enlightening us on a chapter that is, I think, important for everyone. Thanks again, sir.
Thank you, Shadrupa, for giving me this opportunity of being here today amongst all of you. Thank you so much. Jai Hind.